So today we have Wayne Martin here from Real Estate One. He's been a local real estate broker here for the last 20-something years.
Yes.
And we have been talking, both me and Wayne, about the seniors and here in Shasta County,
Right.
and what their options are if they're in a situation where they don't have enough enough funds or resources to fund their retirement.
Correct.
And so we wanted to put this podcast together to talk about some of these resources that they may have and options for.
And so today we want to talk about reverse mortgages, because you don't always have to sell to be able to get access to income, basically, or fix and repair. And so we thought it would be really important to just kind of ask questions that are fairly normal and give you some really good information, and then you can decide if you'd like to talk to Pete about a reverse mortgage or make a decision. And so why don't we get started?
Yeah, definitely.
So how does a reverse mortgage work?
So I just had a customer call me earlier today, actually, and ask me, hey, the same question: how does a reverse mortgage work? So essentially, it's a mortgage that you can get on your house. Okay. And think of it like a mortgage. The only difference is you don't make any payments on this mortgage. Instead of making payments, the balance of that mortgage goes up every month, and you don't make any payments the rest of your life. So if you get one of these reverse mortgages, you don't ever have to make a payment for the rest of your entire life. There's a lot of questions that come up because it's like, that's too good to be true. What are the details? And that's what we want to go over, what those details are.
So the first question would be, who's eligible?
Yeah, another great question. So who is eligible is based on age. So you have to be at least 62 years or older.
Okay.
And so if you're married, then they're going to use the lower of the two couples. So if one's 64 and the other one's 61, you would still need both of you to be at least 62 years of age before you can qualify for a reverse mortgage.
Oh, that's interesting.
Yeah.
All right. So what does counseling involve if you want one?
Yeah, so the reverse mortgage, they call it a HECM, home equity line of credit mortgage. And what it is, it's a reverse, they call it a reverse mortgage, it's a term for it, but they also call it a HECM. And it's FHA that provides this. There's other private lenders that do reverses for like jumbo, but primarily every reverse mortgage is done by the FHA administration. And so
there's lending limits up to a certain point.
Correct. That's right.
Okay.
Yeah. And right now I think it's a little over $1 million as far as the value. For a HECM or for a reverse mortgage, it's the value of the home is the limit, not necessarily the loan amount.
Okay.
So it's the value that's a limit, not necessarily the loan amount. So if you have a value of 1.3, well, then we're going to push the value, whatever that limit of the value is.
Oh, okay.
Yeah.
Okay. Again, let's see. So principal limits and costs. We're talking about the limits of it. And what are the costs?
So on a reverse mortgage, they are expensive. And what makes it so expensive is they call it mortgage insurance. And so with a reverse mortgage, because you're not making payments, the balance does go up. For FHA to continue to offer this to seniors, they have to charge this private mortgage insurance premium. Okay. And it can be over 3% of the loan amount as it gets charged, and it gets added to the loan amount, okay, which is for sure that 3%. And then plus any title, escrow, appraisal, fees. So I would figure if you're looking at a reverse mortgage to be around 5 to 6% as far as cost. Now that is expensive, so that's why you want to weigh out the pros and cons if it makes sense to you. Yeah.
Yeah. So who would own the property?
The borrower, the senior, still owns the property.
Okay.
A lot of seniors, a lot of people ask me, "Hey Pete, do we still own the property?" And the answer is yes. You can still sell the property. You could refinance out of that reverse mortgage. It's just like a regular loan, just you're not making payments. The balance is going up. Okay. And so the other thing is too is if you wanted to sell the home, you could sell it. You can still put it in a trust.
Okay.
And so the family can still get the equity once the borrower passes away.
Okay. Say somebody passes away. Now, what do the heirs receive?
Great question. So let's say you have a reverse mortgage and you're a senior and you've passed away. You put that home in a trust. I highly, highly recommend having your home in a trust. If you don't, I'm just going to make sure we talk about that real quick. If you don't have your home in a trust, I would say that would be your first step. Okay. Before getting a reverse mortgage. I mean, you could still do a reverse mortgage, but I would say using it, because if you don't have a trust, then you're letting the state decide who gets the equity of that home.
Oh, that's not good.
And so having a trust allows you to move it on to the next family member. But your question was, what does the family member get if the parents pass away? Well, what they get is the home, just like you would if they didn't have a reverse mortgage. They get the home and it can be deeded into their name. And if, let's say, you give this home to, let's say I'm the borrower and I pass away and I have a couple kids that are going to get my house, I can deed the home to them after I pass, and according to the trust. Okay. They'll get the home, and then they can either sell the home, they could refinance the home, they could do a number of any things to get to pay off that reverse mortgage.
Right. And normally what I've seen is you have up to a year.
Correct.
After that person dies.
Yeah. So let's
figure out what you're going to do with a loan or sell the house.
Correct. Yeah. Let's say I had a reverse mortgage and I passed away and I wanted to give it to my kids. They would have 1 year to pay off that reverse mortgage, where they could sell the home if they want it and then take the difference in equity, if there was equity, or they could get a new loan, pay off the reverse mortgage if they wanted. Now, I have seen it too, where if it takes longer than a year, then the family can ask for an extension from the reverse mortgage. They'll give another 1 year extension.
Extension beyond that.
Extension,
so
yeah,
2 years.
on the reverse mortgage. Now, one thing to make very important on that trust, if they don't have a trust, you could easily spend a year in probate.
Right.
And before that's before the kids to get the home, you could spend a whole year in probate, and then you have the ability to sell the home or whatever. So it's very important that you have that home in a trust, or you have that figured out.
Right. So, can the family members live in the home?
Yes, they can, as long as the seniors are still living there.
Okay.
Yeah, if the senior is not living there, you cannot use this mortgage as a rental property. It has to be primary residence. But yes, absolutely. If I'm the senior, I live there, I could have my daughters live there, family, friends, they could still live in the home.
Oh, that's interesting.
Yeah.
Okay. Can a reverse mortgage fund a home purchase?
Absolutely. Yes, it can. You can do a purchase reverse mortgage, or you can do a refinance reverse mortgage. So I have a client right now. He owns a home. It's worth about $450,000. He owes about $200,000. So he's going to get about $300,000 of equity, and it's a bigger home, and he doesn't like to do the maintenance. He's in his 80s.
Sure.
He wants to downsize into a very more manageable home. And so he's going to take that $300,000 and he's going to pay cash for a home, but also get a reverse mortgage to where he doesn't have a mortgage payment, and it gets him a little bit of funds to help fund his retirement.
Okay. What are the borrower's ongoing responsibility with a reverse mortgage?
Yeah, another great question. So with the senior, the two biggest things they have to make sure they take care of is the property taxes and the insurance. Okay. So it depends on the situation, but most of the time, the senior will have to pay their own taxes and their own insurance on the property. And so if they don't pay that, the lender still could foreclose. Oh. So if you don't pay your insurance, a reverse mortgage wants to make sure it's insured in case it burns down.
Right.
And so if they don't pay the insurance, a mortgage company would find that out.
Right.
And then they would start the foreclosure proceedings or they would place forced insurance.
Right. Well, first thing they do is put forced insurance.
Correct.
And then
yes, exactly. Yeah.
Yeah. Because they don't want to be uncovered, that's for sure.
Yeah.
So we just covered all that. What if the balance of the loan grows larger than the value of the home?
Great question. So your question is, Pete, what if you outlive the equity in the home? So if I get a reverse mortgage and I live until, let's say, I'm 90 and I owe $400,000, but the home's only worth $300,000.
Right.
That's your question. Doesn't matter. You can still continue on until you pass. Once you pass, or once I passed, then that home can still go to the family members. But the family members are probably not going to want the home if there's negative equity.
Sure.
And so the bank would then just take the home, take the home. Then now it's the bank's responsibility, because the bank now has a loan of $400,000, but it's only worth $3,000. So it's the bank's responsibility to do that. Yeah.
Right. Now, a question that I have is, if you get a reverse mortgage, say the house needs repairs, can you get a reverse mortgage and get a lump sum to like put a roof on?
Absolutely, you can.
HVAC or something like that?
Yes, you can.
And then still get payments?
Absolutely, you can. You just got to make sure there's enough equity to cover all of that.
Right.
So how much they give you is all based on the age. Okay. There is one caveat. You need to make sure that the home doesn't have health and safety issues already.
Right.
So the bank will not lend to you on your home unless there's no health and safety issues.
Okay.
If the roof repair is noticeable and it's leaking, they would want that fixed before they give the loan.
Okay.
Yeah. But you can get over and above, and you can use that money for anything.
Right.
Besides putting it in the market, you don't want to do that.
Yeah. You don't want to do that. So say you had a repair like that, you had all this equity, you could probably get a line of credit to make that repair for health and safety.
Yeah, and then get your reverse. Yeah, there's strategy.
Some of the contractors that we work with will actually bill escrow.
They could do that too. There are multiple options if you have something like that. Yeah,
and that's why you'd want to talk to Pete and talk to me about different strategies about your house, because we're here to serve. I mean, it's wonderful to sell somebody's houses, but we're really here to make sure that if that home is perfect for you, let's keep you in it as long as you can, as long as you want to be. Absolutely.
Yeah. The maximum that the FHA, HECM, or the reverse mortgage that will lend to you is all based on your age and the value of the home.
Okay.
And so think about this. The older you are, the least amount of years that you'll have that loan, which the least amount of equity they'll be eaten up by that.
Right.
So the younger you are, the lower the loan amount they're willing to give you.
Right.
So at 62, you're probably going to be right around 30% loan to value max that they would allow you to get up to. But then it gets higher as you get older. Mm-hmm.
Okay. So one of the things that I've seen is people, think about getting a reverse mortgage, and they want to go on a trip. They want to spend their money on things other than living. And, is there a danger in, taking your reverse mortgage too soon?
Sometimes, depends on the situation. Yeah, I would. That's where counsel, I would say, would come in, and making sure you're making a good choice, because if you're taking it too soon, there may be other expenses that come up later on, like having to, maybe you need to go into a retirement facility or something, and you might need some of that equity, to move out of the home, sell that home. Does that make sense?
Yeah. Now, if you tap out all the equity, you use that 30%. You were young, use that 30%. You could still live there, correct, until you pass away?
Oh, yeah.
They can't foreclose you out.
They can't. They will never foreclose.
Insurance.
Because if you pay the taxes and insurance, they will never foreclose, ever.
Right.
Yeah, you could live to 120 years old.
Wow.
And, with today's medicine, I would say that's...
I'm really looking forward to that.
Yeah, it could happen. The average age has been getting more and more. And so, you could outlive for sure.
Right.
My wife is cleaning a home for someone that's just turned 99. Yeah. And she's as smart as a button. I mean, she's got, all her faculties, and is very smart, and she'll probably live to 105, 110
my
maybe.
mom just turned 91 in November, and she's rocking and rolling.
Yeah.
We see that more and more. So, It's
Yeah.
really great. But what's really great is this option if it works for you.
Yeah.
That's what's really great.
So Wayne, here's a question for you. You know, the reverse mortgage is definitely an option, but what happens if the family or something, you know, you don't want to do it? What other options are there out there for seniors that want to downsize?
Oh.
You know, that, you know, want to,
Right.
you know, what's out there that's available for them?
Well, the thing about it is you can, you know, obviously sell your home.
Yeah.
That's one thing. Or you could rent it out, get him, you know, if you can handle that and you had help, you
Yeah.
could potentially rent it out.
And that could be additional income.
Additional income and some tax write-offs. Although usually, you know, when you're older, you're not going to have that. You're not going to be in a high tax bracket.
Yeah. Makes sense.
But, you know, if you look at it and you go, well, you know, if I get out from underneath this home, like Freddie and I, we moved into a seniors community about 6 years ago. We're considered young. You know, you move in as like 55 and older.
Yeah.
You know.
Yeah.
But what was great about it is the layout of the house. We didn't have a bunch of stuff anymore. We didn't want it because it's just a pain in the neck to manage it, take care of it, and we just got rid of it and asked the kids, do you want it? And they said no, take it to the dump. You know, so you know, so it was really a nice transition. So we sold our bigger house, and it was a multi-stage process because we were on 10 acres, big house, custom, blah blah blah.
Yeah.
And then we moved in town, had a little smaller house. It was still 4-bedroom, whatever. But then we decided it was a stage where we went to Paris Park here in town, and it's 1,450 square feet, 2-bedroom, 2-bath, great living space, you know, bigger, wider open, great room kind of living.
Yeah.
And although they have different floor plans, but it just worked out great.
Yeah.
And we love it. They mow the lawns and they blow and trim, and we've got a rec room and swimming pool, but we don't have to maintain it. That's so awesome. So, you know, that's something that you could look forward to working into assisted living, or besides a seniors community, you could go into assisted living. For some people, that's important. And sometimes you just need to sell your house to move into a rental. You know, or cohabitate with a friend.
And that, and I didn't think about that too, because it makes sense, because now the landlord's taking care of it. You don't have anything. You have to, mow the lawn, the weeds, nothing.
You know, depending upon your age and you know what you're about. And sometimes, you know, you just need to tap into that equity that you've saved up. And you may have children, adult children taking care of you, or grandkids. Yeah. You know, so there's a lot of different options. Yeah. Again, you know, our goal is to be a resource and not just say you got to go one direction. Yeah. Because not every direction is the right direction for you. It's got to be custom tailored, understood. Yeah. And some serious questions need to be asked. Yeah. You know, from the outside looking in that has experience. Yeah. You know, to really help you make a great informed decision.
Yeah, and it's not just the senior, it's also the family. It's the kids, it's the, you know, everyone involved contributing to, hey, what's going to happen long term.
Right. Yeah. And not all the adult children are, you know, interested in their parents, honestly. Yeah. You know, so that factors into it. Or they have a job that moves around. You know, they're trying to work and make a living and raise kids and get their kids in college and all this. So you really need to have these good discussions and look at all the different options that you have that could potentially make sense. Yeah. You know, maybe you could buy a home and build an ADU, or buy a home that has an ADU, where you could be in the ADU and you rent the house out in front. Yeah. Or reverse that, where, you know, if you have enough money.
Or have someone that's your caretaker live in the ADU unit to help with the things. Yeah.
You know, and if you're young enough, like Freddie and I got long-term care, but we started when we were young, so it was cheap. But you hit a certain age, they won't sell it to you, or it's so expensive it makes no sense whatsoever. Yeah. So you could stay at your home and have care there, or if something really bad happened, we move into a facility.
Yeah. So someone, what's the latest someone could look into long-term care? Like I'm 44.
I really don't know.
So like,
but
could I look
44,
into?
you could look
Could I
into
look
it.
into it?
Absolutely.
For long-term
I believe
care?
So I would definitely check.
Yeah,
it
that's
out.
what I was wondering.
Yeah, because we had the experience of my grandfather and grandmother didn't have long-term care, and they ended up burning through all their money, and then they moved in with my folks, and it was just a difficult situation. I mean, everybody took care of the thing, but it's just hard on the family, and like we looked at that and we just go, oh, we got to go check long-term care out.
Yeah.
Because what it does is if you don't have it, you could burn all your money up,
All your savings.
all
and,
your
yeah.
savings, your home equity, everything.
Yeah. Yeah.
And come out with zero and still.
I'm going to look into that because not only for me, but also for potential clients in my age.
Absolutely.
And,
Paying insurance is like, oh man, I don't want to make that payment. But when you look at the economics of it, and what it does for you, it's something to look into, definitely.
Yeah. Cool.
Yeah. Anyway, so, we hope that helped. That isn't all the questions you
may have,
but we're here as a resource.
Yeah, absolutely.
So
give us a call, reach out. Yeah.
Reach out to us. We're happy to help and give you, as much information as you can possibly get and send you in the right direction.
Yep.
Whatever that is for you.
Cool. Well, thank you, Wayne.
Thank you, Pete.
Yeah, I appreciate it. I think that's really good.
All right.